Hey traders, checking in on the stock market today. Bulls showing up first thing with our growth names standing out as the strongest. QQQ Bulls ended the day on the strong note as well. Rotation continues to go on. Bulls continue to keep bigger picture control. We'll see which individual names were standing out and where the money is coming from rotating into these growth names. So looking at the S&P 500 futures chart, because again, it gives us more information, we can see a double bottom with the low of Sunday night. And if you're looking at SPY, that support level isn't there. And that's because we were not trading on SPY Sunday night. So you get more information by looking at the futures chart, especially coming from the weekend when there's that chunk of time where there's active trading, but not in SPY. So a double bottom hold of support, and now we're looking back up at resistance. Still a lot of resistance at the all-time high. This is SPY here. SPY with the second or third highest close ever. But we're right there. And at this point, we would have to break 416.28 for there to be any red flags from the bulls. We don't necessarily have to break resistance right away. The sooner the bulls can break resistance, the more comfortable they're going to be. But it's only a red flag if we lose the daily high or low. And of course, with a new all-time high, we'll be looking at psychological resistance levels. Bulls are strong. NASDAQ 4-hour bull flag confirmed. Really, bulls turned it on in a big way at the end of the day. And just like that, we are looking at only really two resistance levels left. And looking at QQQ, the resistance is 336.65, which we closed at, and then the all-time high, 342.80. So remember last week we were looking at these, and while it visually didn't really look like a bull flag, it was a bull flag, and our retracement levels showed us that, as far as our retracement being 382, and here we are confirming the bull flag with follow-through. QQQ was very notable today. If you've been watching how the market trades for 2 weeks now, there's a very common pattern. It's not every day, it's just more often than not. And that pattern is an open, XLF, higher open and consolidation through the morning. And there's a pattern where QQQ hits a low and then the growth names V-shaped to a new high. So what does that look like? I'll show you. So QQQ, choppy all over the place. And again, remember our lesson where bigger picture, whether it's SPY or QQQ or Bitcoin, if it's trading sideways, if Big Daddy is trading sideways, it allows for rotation and individual names to do their own thing. So QQQ was a choppy mess today on really the first hour and a half of trading, first 2.5 hours of trading. Choppy mess. But while that was happening, growth showed us bulls are in control. And look at NIO to start the day, 5-minute. Little drop, V-shape for the bulls. CGC in the MJ sector, V-shape, increasing bull volume, all bull control. ARC, high of the day, low of the day, V-shape, all bull control. Biotech sector, they did it and had news. We'll talk about that in just a second. But you get the idea. PLTR, big drop, V-shape to a new high. That happens often. And if you go back and look at the last 2 weeks, here's what it did on Friday. Look at PLTR. High, big drop, V-shape. What did CGC do? Probably different. Didn't do it on Friday. But my point is, this is a fairly common pattern over the past couple of weeks as we are watching the rotation into the growth names. So now the question is, can the growth names break the highs of last week to see follow-through? The strongest names have already done it. So just looking at NIO, which is one of our strongest growth names. Daily bull flag confirmed. The monthly high or low has already been set, and it's just getting more follow-through at this point. PLTR has been a stronger growth name. It didn't break the high of last week yet, but we're right there. And then we have some of the weaker names that are trying to make their way back, and ARC is one of them. So ARC, more pullback than the bulls wanted to see last week, but here we are, heading back up towards that high of 115.14. If we reject from 115.14, I'll probably take half of my position off, and then I would re-add it even if it was higher if the bulls prove bounce follow through. Remains to be seen if I'm going to do that yet. I need to see what tomorrow shapes up as and whether or not bulls maintain the hourly uptrend. So, aside from that, our other growth names, biotech sector, big recovery. We never lost the daily high or lows. It was a weak bounce, And then BIIB had Alzheimer news and big bull follow through. Daily uptrend continues, weekly time frame continuing its bounce, has not topped out for a weekly lower high yet. 140.88 resistance. Good save by the bulls. You can see the big bull volume. It was just, and look at the 5-minute time frame. It was just a massive bull volume morning in reaction to BIIB Alzheimer news. And here is BIIB's reaction. Big gap up after it was halted. That's a big gap up. So that helps the sector out in a big way. Who else for growth? Solar stood out as weaker for growth today. Did close up near the high, but not the big green day that many names did see. So out of our growth grouping, I would say solar was the weakest today. IWM, daily bull flag confirmed, 230.95, and then 234.53 are our only resistances in play. All-time high back in sight. Strong start to the week for the bulls. We'll see if they can keep it up. The financial sector was the weak link today. We rejected from the high, the all-time high, but if we hold 20, make that 38.04, bulls will keep complete control. If we lose 38.04 support, then we're looking down at 37.22, and we're looking at weekly consolidation likely being underway. I still have some bearish XLF exposure, a little bit less than last week, but again, today is the ideal day for how I am personally positioned, bullish growth and bearish XLF. So where is the money coming from into these growth names? I thought it was going to be coming from XLF, and I was looking for a confirmed daily downtrend here to lead to more pullback while the growth names kept bouncing. That didn't happen. In my opinion, the money's not coming out of XLF in any major way leading to growth names going up. It's really two places, in my opinion. Crypto, probably from crypto, as the bounce in the growth names aligns with when crypto really started pulling back from its high. And it was clear our all-time high is going to be set for a while at this point. And I said in a recent video at some point, I don't know if I said it live or in one of these videos or what, where if I were forced to put my crypto profits somewhere, it would be in growth names because they are names that are consolidating off of their all-time highs for 4 months. And the risk to reward of bullish entries there versus any other major sector was much more favorable because, again, multiple months of consolidation leading into an entry as opposed to names that were still up near all-time highs without much of a pullback. So I do believe there's crypto money going into these growth names. And the other place is big tech. The most important names in the tech sector, Apple, Amazon, again, they are disconnecting from what QQQ is doing more so than they've done at any time recently. And if you look at how many days in the last 3 weeks, I haven't done this, but how many days in the last 3 weeks, QQQ has been stronger than Amazon and Apple. It's probably more frequently in the last 3 weeks than at any point in the last many months. It's a notable shift going on. While they're trading sideways, QQQ is still going up. And that tells us if the most important names in QQQ are not going up, it's all the smaller names that are making it go up. So I do believe that money left Amazon and Apple to a certain degree to rotate into these growth names. And Netflix, which is also one of the weaker tech names. Google and Facebook are still strong in the tech sector. Google is 1.3% from all-time highs. Facebook hit all-time highs today, confirming the daily bull flag. So we're distinguishing those names. Microsoft is middle of the road, but it's bigger, it's stronger than Amazon, Apple, Netflix. So I'm going Facebook, Google, Amazon, Apple, Netflix, and Microsoft is honorary bull mention. Healthcare sector, big upper wick today, but still holding the weekly EMA 12. Weekly bull flag is possible, and the bulls will need to change the daily trend back in their favor with a higher low and higher high. So XLV was a big part of bull's strength today, even though we did sell off a bit into the close. Certainly bull's strength in the morning. Keeping an eye on things, XLV matters less to me than XLF and QQQ, but always watching to see if there's anything notable going on. So again, solar sector, bulls have proving to do. Got to get back over the high of 80.97 to keep this bounce going. and they were weaker today comparative to peers. Semiconductors, daily higher lows set, 244.80, and need a break of 253.13 to keep this move going. Daily inside bar today, and NVDA hitting a temporary top. So NVDA, indecision candle, and hourly equilibrium, big drop from the high, big bounce off the low. One of my trades today was an NVDA bounce. We'll go over that. But have to be watching for inevitable daily consolidation, which will be healthy. We're due. And that could lead to SMH struggling to break daily resistance, but no red flags for the SMH bulls unless we see a bear break of 244.80 support. USMJ, tight and sideways. If the inside bar breaks bull tomorrow, our daily higher low is set. And again, I'm focusing more on Canadian MJ. TLRY, nice bounce. I traded that today. We'll go over that. Scouting a daily higher low after a big pullback to end last week. And again, they are in the growth sector as well. They were our laggard growth names. And the VIX on the verge of confirming a daily bear flag, not doing so yet. 1568 would have to break to confirm the daily bear flag. So overall, strength in general, some profit taking in XLV, some profit taking in XLF, growth names continuing to show some strength, but some more proving is needed for daily resistance breaks. Some names already breaking resistance, but most still need more follow through to break the high of last week. The dollar is still weak, potential weekly bear flag. So we changed the daily trend with zero follow through for the bulls. We're looking at a higher low, anything above 89.66. And we'll have to lose the daily higher lows if we are going to see a weekly bear flag follow through. But for right now, dollar bears are looking at this weekly chart and they're not worried in the slightest at this point. Gold, 4-hour equilibrium, broke bull. Silver did the same. Could this be a weekly bull flag? Absolutely. Just like the dollar could be a weekly bear flag. And silver did the exact same on the 4-hour, confirming the trend change. Just keep in mind that with the 4-hour bull break, it's possible that that's just going to lead to now a daily lower high and a tightening daily range on gold and silver. But overall, weekly time frame, no red flags as bulls bought the dip, at least so far. And the miners trying to shift momentum. Bulls need to break 38.96 to keep a weekly bull flag alive here as well. The metals and miners have weekly bull flags. It's just a question of whether or not they are able to confirm. Oil still keeping very strong. Higher low every day the last bunch of days. 4-hour uptrend intact. If we lose the 4-hour uptrend by breaking 68.93, we zoom out and scout a daily higher low with a lot of space for the bulls to form it. And natural gas trying to form a daily bull flag must hold 2959 and break 3086 to follow through. Natural gas bulls are hoping to lag the oil bulls. Oil bulls broke out last week. Natural gas bulls trying to break out again this week. Keep an eye on natural gas as long as 2959 holds. So excited to see, can the growth names follow through? Can we keep these monthly bounces going and higher lows? Can the S&P 500 hit all-time highs? Again, the broader market bears aren't showing us anything. So a lot of people still talking bubbles, still looking for crashes. Volume will show up for the bears and daily support levels will break if the bears want our attention. And if they don't, then the bears don't deserve our attention. As far as the broader market is concerned, there's always little individual names that are showing comparative weakness. There's always bear trades to be had on individual names. But if we're talking big picture, it's still all bulls until proven otherwise. So trades today, traded AMC a couple times. First trade was while I was live streaming, and I fumbled it a bit. Was looking for a 5-minute higher low here. Zoomed into the 2-minute time frame. Said, okay, it's a bit of a waterfall drop. And I was looking at this support established on the way up. 53.21, 53.86. And we bounced off 53.17. And I made an entry for the 5-minute high or low. And I was just looking for a 5-minute low or high. No home runs or anything. Just wanted a little bounce, which is big percentages if trading AMC, of course. So I got filled maybe, I forget where, upper 53s perhaps. And my stop would have been based on my risk allocation. The bounce took a little while to get going, and I exited half of my position at break even because the bulls were not convincing enough. I'm trying to find it on the 1-minute time frame, but I can't. But I bailed on half the position early to just cut my risk in half right then and there. And then we got a bit of follow through. My target was upper 55s, and I was talking about the trade, missed my initial exit, and then exited at 55. In the end, it ended up being a third of a day maker, but first mistake was exiting half the trade too early because I didn't trust the bulls. Second mistake was talking instead of executing, and that was a bit of a distraction. But a small win to start the day. And the reason I sold half when the bulls didn't start to get the bounce going as soon as I wanted them to was because I didn't want to start the day with a solid red loss. I would rather eat a break-even trade or have a small win or a small loss. All of those would be more acceptable to me than a solid day loser to start the week. So I wanted to avoid that, and that's why I sold half fairly quickly. So looking at AMC, the trade opportunities were there playing off support. Just look at the way up initially. 2-minute plays off support. We had a higher low of 53.16. We held that support level by 16 cents. And then from there, we went 11%. So you're risking 0.5%, and your reward is double-digit percentage. That's risk to reward that you want to align yourself with entering on consolidation. And then it did it again on the 5-minute time frame with opportunity. And this was the second trade I made on AMC today. So high, low, lower high, and then looking for the higher low, anything above 53.17. So I entered low 54s. And at that point, I said to myself, okay, if that is not our 5-minute high or low, I want to be stopped out. I'm not putting my stop under 53. That's an extra dollar risk. So I saw things tighten up on the 2-minute, and I said, okay, good enough for me. I'm expecting a 5-minute high or low. I'm in the low 54s. I sold half on this 2-minute candle. Now I'm risk-free. And I put my stop under 53, risk-free, and I let it play out. And it played out all the way back up to 59s. And I just said to myself, I'm having a good day otherwise, and I'll talk about the other trades that I was in. And I'm just going to either stop out, break even on this trade, or it's going to be a home run. And we're going to go back up towards the recent highs in the 60s and 70s. So I did leave some money on the table by not locking in profit, but it was because I already had a couple day maker locked in, and I did end up stopping out break even on this trade because I allowed it to play out a little bit longer. Other trade I took, NVDA oversold bounce. Why? We're coming off the all-time high, 15-minute waterfall. 15-minute RSI was just hitting the teens. 5-minute RSI was in the low 20s, and the 2-minute RSI was just hitting the teens. So I look at the 15-minute waterfall, and I zoom into the 2-minute chart, and I'm looking at it right here. And I'm saying, okay, volume's picking up. I'm looking for a volume climax. And even if I don't nail the 15-minute oversold bounce, which is the scaffolding of the trade, that's the bigger picture time frame that I am playing. I am playing for a 15-minute oversold bounce. But I know that with this kind of a drop, we're due for at least a 2-minute bear flag. So I make an entry, an initial scale in, 68.70s or 68.80s, 688.80s. I would have entered one more if we broke 686 with no bounce. Fortunately, we started this bounce. I sell half on this bounce. I put my stop under the low. I am risk-free. And again, the 2-minute time frame is key for that trade style, because if the 2-minute time frame is bear flagging, I'm not making that entry because I am not confident a 2-minute bounce is coming, because we had just dropped straight 10 minutes in a row with all those other time frames already oversold. I knew that a 2-minute lower high, even if it's just a rejection and continuation down, I know that 2-minute lower high is likely, and that gives me the wiggle room I need for a quick flip, sell half. So if I sold half in the low 690s, my break even is now 685 and change. So that's what I did. Set my stop under the low and said, okay, bulls, have at it. get that 15-minute oversold bounce going. Position sizing. So I traded for really, I compare everything with what is my standard Tesla size position, because I was trading Tesla like a madman. I forget, I guess it was last year at this point. And that was just my most active day trader. So the position size on Tesla is my baseline criteria. I'm trading AMC with a third of Tesla position size. I'm trading QQQ or NVDA with double the Tesla position size. And it all has to do with volatility. The more volatile names, I'm using less capital because I don't need as much capital. If I'm using the same capital, that's a ton of additional risk and reward. I'm trying to keep risk and reward roughly the same, and so I am fluctuating my capital size based on that. QQQ, if I'm trading common shares at QQQ, it is way less volatile than Tesla or AMC or anybody else. And even NVDA to a certain degree is less volatile than all those names, which is why I'm using larger position sizes for these names. So I let the 15-minute bounce play out. My target was the 15-minute EMA 12. We ended up getting a lot more bounce follow through, but I had to leave the computer and be gone for an hour plus to run some errands. So I locked it in before I left. Left money on the table for sure, but at that point, if I sell right then and there, I've got a 3-day maker on the day locked in. I've got a great start to June with, 15-day makers in the first 5 days of trading. A lot of that thanks to AMC, but I just locked it in. The alternative would be what I did for AMC. And because I was doing that on AMC is probably part of the reason I didn't do it on NVDA, as far as just setting your break-even stop and then going and leaving for an hour and change and then coming back and hoping that the bounce is still following through. What I didn't want to do is miss my exit on the 15-minute lower high because I believed that daily consolidation was very likely with how the day was shaping up. And because of the bounce follow-through, it's now less likely that daily consolidation is underway. But one of the reasons that I was quicker to lock in NVDA is because the big picture daily consolidation was fairly likely. One more TLRY. Big bull move today. Nice follow-through, daily inside bar. There was a play off the low of Friday, first thing this morning, 5-minute oversold bounce. I didn't take that trade, but I played the hourly higher low. I saw this pullback. I saw hourly EMA 12. And I saw the 5-minute RSI approaching oversold. So again, same thing. I'm looking for a waterfall drop on the 5-minute here, so I know that even if it's not the hourly higher low, a 5-minute lower high to give me some wiggle room is likely. So I entered 1948 with my first scale in. I would have entered again a second position if 1930 broke from here, still in straight free fall on the 5-minute. But this bounce here was enough for me to exit half of my position, put my stop under the low, risk-free, and let it play out. And I'm swinging that remaining position into tomorrow because my break-even is 1937, and we closed far enough above my break-even that I'm going to give the bulls a little bit of wiggle room. So that is my style for trading bounces. Bigger picture, I'm looking for a most likely scenario, hourly higher low. But I know I may not nail that hourly higher low. So I sell half to put myself in a risk-free position. If I'm wrong, I lose nothing. And then I can still scout an hourly higher low, even if I stop out break even. That gives me my ammo back, and I'll try it again perhaps, depending on what the setup is. But if I get that short-term bounce that allows me to sell half and go risk-free, I have the potential, again, zero risk, unlimited reward. Obviously, I have targets, so it's not unlimited, but you get the idea. And I am finding a lot of consistency. I've never had this consistency that I have for the last 6 months of trading, and this style is a large part of that. And again, I'm leaving money on the table left and right, but I'm limiting risk in very beneficial ways for consistency. And by leaving money on the table left and right, I just mean if I didn't sell any TLRY or if I didn't sell any NVDA, then I have bigger wins. But again, it's the whole style of what I'm doing. It's that partial, quick sell. This could have been a 5-minute bear flag, and I would have lost $0 if it were. That's my kind of trade. Feel free to ask any questions, do good things. and we'll see you tomorrow.
I heard and felt a giant flying thing hit me in the back of the head while I was watering. And I find this guy 45 minutes later while sitting at the computer on the back of my head. I was just about to give up and think that she wasn't going to have any babies this year. Alright, the mint and lilac tea was a smashing success, so today we're going to do rhubarb. We cut up the stems, it tastes kind of like a mild lemon, a lot of vitamin C. We're going to do some more mint. Hasn't recovered as much as I would like it to, so I'm going to be a little bit more picky with how much I take. And strawberries.